Today Jeremy published this video, 10 stocks I'm buying relentlessly now. Stock market collapse 2022. In this video he's talking about 9 stocks actually his own and 3 that maybe he will buy in the nearest future. And I was waiting for a video like this because I really like to track other guys' portfolio, and I was thinking about to make something huge, like Jeremy staking money from small companies or something like this, but honestly it looks like it is a normal companies, and I hope we will know the performance maybe in 2 or 3 years, and I will leave a link to this chart in the first pinned comment. Okay, we have OTLY, Amazon, Meta Platforms, Planet 13 Holdings, TTCF, PYPL Holdings, Honest Company, Corsair Gaming, Avant Brands, PLTR Technologies, Netflix and Shopify. It is a small portfolio for $100,000 just to track it. Actually, we have price to earning here, and as you can see, only 6 companies have positive earnings, and it is definitely interesting. Plus we definitely have extremely risky one with $44 million market cap, and I think Planet 13 and TTCF a little bit risky too as a honest, but anyway we can expect average return or performance for 2022 close to 16%, and if we're talking about end of 2023 it is 40%, but I think it is not really good companies to buy, because I have the same portfolio, and I will blur it a little bit, but performance for first year 70%, and performance for the 2023 it is 106%, and from my point of view my company is much better, and it is only one company without price to earning, and I have only one the same stock in my portfolio. It is a PayPal, but I worked with it via options. I will use price to sales and CAGR method. You can check first link in the description to know a little bit better. But for simplicity, we have to determine margin on a long run and CAGR for this company. And we're getting price to sales or theoretic price to sales, where we can multiply our money for 10 in close to 10 years. You can see this table, and I will show how it works. First one, it is OTLY, and I think it is absolutely garbage stock, because I can make something like the milk in 2 minutes via blender, and it is not interesting for me, but if Jeremy thinks that it is a super nice company, anyway, we will check it. Future revenue growth rate 35%, and we have expectations that in 2024 they will be profitable. They are working on a low margin business. I think we can expect maybe 10% in margin, and we already know 1.35 CAGR. In my table I don't have 30% plus revenue growth rate, but with 10% margin I think price to sales 3 or something like this is okay for this stock. Here you can see how it looks on a OTLY group chart, and actually we reached this number, price to sales right now 2.85, and we can expect maybe 4 with something, or just $4 in this year, and it is 14% performance. I think it is okay. Next one, Amazon, and you can see that now they have not really high margin, 5%, but again on a long run with AVS they can reach 10%. Then we have sales growth rate by 40 analysts, 16.9, but I will use 20% for simplicity. And now we have CAGR and margin. CAGR 20%, margin 10%. We are opening this table, and you can see revenue growth rate 20%. It is like in Amazon, and margin 10%. And that means that price to sales 3, it is quite high. It will take us 11 years to 10x this stock. Here you can see how this model works on a chart, and it's quite good. You can see that green line quite close to real price, and yes, it is a good stock and we can expect some profit, but from my point of view it is not a good time to buy the stock, because I'm expecting maybe $2,000 in Amazon, just because it is a technical analysis. Next one is Facebook, and I think it is an amazing company. Like Jeremy, margin 30% plus right now, CAGR 20%, and you can see it here, profit margin 31, analysts predict 16% CAGR, but for simplicity, I have a better numbers. And in my model, you can see that with revenue growth rate 20%, price to sales 9, it is 11 years to 10x our money. Actually, to see it on a chart, we need price to sales and CAGR 9 and 1.2. Definitely it is a nice time to buy this stock, because even if they will fail with their meta something things, they are making a lot of money right now and their profit margin very high. I'm expecting plus 100%, but it can be not really right now. Maybe in several years we will see this performance. Next one is a little bit interesting. Planet 13 Holdings. I actually don't like companies related to this niche, but anyway, CAGR 1.3, margin, they don't have it right now, but okay, they're working on a low margin niche, 1.3, 10%, and we're getting price to sales 3. From my point of view, it is absolutely not interesting stock, and you can see how it looks like, and in 2020 actually it was a fair price with price to sales 3.5. Now we can expect maybe $2, but price right now ridiculously low, 1.59. TTCF, again, they are not profitable right now, and it is just plant-based food, frozen one. Maybe they can generate 10% in 5 years or something like this. 10% CAGR 1.2, and we're getting price to sales 3. And if you want to check this awesome table again, we are getting, we can expect high growth rate, and we need to use this small table with 10% margin. Here you can see it on a chart, and it looks really nice from my point of view. Again, now we have ridiculously low prices, and maybe that is why we can expect some profit in the future. Here you can see PayPal, price to sales 4, CAGR 1.2, and actually you were able to buy this company with this price in 2016. Or maybe in 2017, 5 years ago, and now we are on bellissimo levels. I bought options for $90 and sell puts for $90. I really believe in this stock, and actually it is not really late to buy these options because they are on the same levels. Honest company, and I think I don't actually need to show it because again, low margin, low CAGR, and we can check it gross margin 34%, and analyst expectation 10%. Nothing interesting, and we're getting price to sales 1, and it's just minus 9% in this year with prediction 3.75. Then we have Corsair Gaming. Again, everything the same, CAGR 10%, margin 10%. You can see it here. I just adjusted a little bit because in 2020 it is 1.5, then 15%, and now they have a low margin 5%. Even with these numbers, we're getting price to sales 1. Here how it looks for Honest company, and here you can see Corsair Gaming with price to sales 1 and CAGR 10%. Actually, it is nice time to buy it if you believe in this company. I want brands, and I don't actually understand how Jeremy, with his experience, can offer something like this, because it is extremely risky. And with a 10% margin again, but no one have this amount of margin right now in this niche. And CAGR 30%, we can expect maximum price to sales 3, and we are on the same levels right now. A little bit scary chart. Then we have 3 companies with high margin. It is PLNTR, NFLX, and Shopify. Then definitely we have something interesting, because PLNTR expect 30% CAGR, and it is extremely high. Plus, as you can see, they have a gross margin 78%, and it means that on a long run we can expect profit margin maybe 20. With these numbers, I can expect price to sales 10, and 10 it is definitely awesome. Here you can see the model, and maybe we will see something like $8 plus minus. But if you are going to hold it for 5 years, it doesn't matter, because we have a low downside and a huge upside, and maybe it is a nice time to buy it again, if you are able to hold it for a long period of time. Analysts predict for Netflix 10% CAGR in revenue, and we're getting only price to sales 2. And here you can see the model. Actually, I think it is a little bit cheap for Netflix, but anyway, I am expecting 150. Probably we can expect some bounce back, maybe to 260, and on a next move in my direction, I will probably buy it, maybe for 150, 160 or $170, because it is definitely interesting stock. The last one, Shopify, price to sales 10 again, because they have a high number in CAGR 1.3 and margin 10%, because I think in this niche they actually need a lot of developers, and it is quite hard to make 10% from gross margin 53% in this niche. And you can see analysts predict 32% sales growth rate. The last model, Shopify, price to sales 10, CAGR 30%. I don't think that we have some kind of upside. And actually you can see that in 2017 you were able to buy the stock with the same price. As a resume, I think Jeremy Lefebvre is awesome guy, and actually you can learn a lot from him, but I think it is not a good idea to hold a lot of not profitable stocks, and maybe it is not a good idea to buy some slow growing low margin companies like Honest, because definitely it is not interesting from my point of view. Then we have some, and again I think this company a little bit risky from my point of view. Thank you for watching. What do you think about all of this, and what do you think about Jeremy? Please write down your thoughts in the comment section below.